Hey everyone, and welcome. Does the phrase portfolio planning just sound complicated, like something only Wall Street pros do? Well, not anymore. Today, we're going to tear that idea down and break it into 5 super simple steps that you can actually use. So, you ready to finally take control? Let's dive in. So, let's be real. Does the whole idea of creating a long-term investment plan just feel huge, like totally overwhelming? If you're nodding along, trust me, you're not alone. It's a really common hurdle. But what if we could flip that script? Turn all that stress into straight up confidence? Well, that's exactly what we're here to do today.
All right, welcome to our 8th class on investing and wealth creation, our one and only goal today, to make this whole process simple and most importantly, actionable. Oh, and a quick heads up, I've got a really important question for you at the very end, so you're going to want to stick around for that.
Okay, so here's our game plan for today. First up, we're going to figure out your financial starting line. Then, we'll get into the fun part, creating a blueprint with your goals and deciding on your assets. After that, we'll talk about the actual build, how you put it all together. And finally, we'll cover the long game, how you monitor and rebalance things. It's the whole roadmap from A to Z.
All right, let's jump right in. Step 1, your financial starting line. I want you to think about this like you're building a house. What's the very first thing you do? You lay a solid foundation, right? And for us, that means getting really, really real about where you stand financially right this very second.
So here's the deal. The most crucial thing right now is to just get a clear snapshot of your entire financial life. And listen, this isn't about judging yourself or feeling bad about anything. It's just about gathering the facts. It's data. I mean, you can't map out a trip if you don't know where you're starting from, right? First things first, what do you actually own? This is where you list out all of your assets. We're talking cash in your savings accounts, any investment portfolios you might already have, real estate, maybe even some valuable personal property. And hey, if you're just starting out, this list might be pretty short. That is 100% okay. In fact, that's why we're doing this. Okay, now for the other side of the coin. What do you owe? This is where you list out all your liabilities. Yep, we're talking student loans, any credit card balances, your mortgage, the whole shebang. Anything you owe money on goes on this list. Getting it all down on paper is the only way to get a true picture of your financial health. Next up, let's talk cash flow. This one's simple. Where is your money coming in from? And this is the big one, where is it all going? You gotta put on your detective hat for this. Seriously, pull up like 6 to 12 months of your bank and credit card statements. This is usually the most eye-opening part of the whole process. You might be shocked at the difference between what you think you spend and what you actually spend. And last but not least for this section, if you already have some investments stashed away somewhere, now's the time to take a peek. What exactly are they and how have they been doing? This final piece completes our financial snapshot. Now we have the full, honest picture to work from. Awesome. Okay, so we've laid the foundation. Our financial snapshot is complete. Now it's time to actually start building. We're moving on to drafting the blueprint. This is where we cover steps 2 and 3, defining what you're building for, your goals, and then choosing your materials, which is how you'll allocate your assets. This slide right here gets to the absolute heart of it. A goal like, I want to retire comfortably. I mean, that's nice, but it's a dream, right? It's fuzzy. But a goal like, I want to save $1.5 million by the time I'm 65 so I can travel every year, now that is a target you can aim for. Being specific is what turns a wish into an actual workable plan. So once you've got those specific goals, it's time to get a little personal. There are 2 really big questions you have to ask yourself. First, what's your time horizon? Basically, how long do you have until you need this money? And second, what's your risk tolerance? How much of a market roller coaster can your stomach actually handle? And you got to be honest here because these answers are going to shape your entire strategy. And that brings us perfectly into step 3, asset allocation. It's a fancy term for a simple idea, deciding where to put your money. Just look at this table. You can see how your risk tolerance, what we just talked about, directly changes the mix of stuff in your portfolio. If you're more conservative, you'll lean more on stable things like bonds. If you're more aggressive and looking for growth, you'll go heavier on stocks. It's all connected. So, just to make this crystal clear, let's take a look at a moderate profile. You can see it's a nice balanced mix, right? You've got a big chunk in stocks to fuel that growth, a good amount in bonds to keep things stable, and then just a little bit in cash and alternatives.
This right here, this is the blueprint. This is what your portfolio could actually look like.
Okay, blueprint's done. Now for the really exciting part. Step 4, the build. It's finally time to pick the actual investments that are going to bring this whole plan to life.
So right off the bat, you've got a big choice to make about your management style. Are you going to go the active route, hands-on, picking individual stocks and bonds yourself, which takes a ton of time and research? Or are you going to go the passive route, a more hands-off approach, using funds that give you instant diversification? Look, there's no right or wrong answer here, but it's a really critical decision to make for yourself. Now, for anyone leaning towards that passive, hands-off approach, let me introduce you to your new best friend, the index fund. All it is a type of fund that's built to just copy a market index, like the S&P 500. So instead of trying to beat the market, you just are the market. It's a fantastic, low-cost way to get diversified instantly without the headache of trying to pick winners.
And that brings us to our final step. But this one's a little different because it's ongoing. It's step 5, monitor and rebalance. I know it's tempting to think of this as a set it and forget it kind of deal, but it's not. Your portfolio is more like a garden. It's a living thing that needs regular checkups to stay healthy and on track. So here's what you do. Literally open up your calendar right now and set a reminder for once a quarter or maybe twice a year to do a portfolio review. And when that reminder pops up, you're going to ask yourself these questions. How are things performing? Am I still comfortable with this level of risk? Am I still diversified? This isn't busy work. This regular maintenance is what will actually keep you on the path to your goals. And during that check-in, if you notice things have gotten a little out of whack, it's time to rebalance. So let's say your plan was to have 60% in stocks and 40% in bonds, but the stock market had a great year, and now you're at 70-30. Rebalancing just means you sell off some of those winning stocks and buy more bonds to get back to your original 60-40 target. It's that simple. It's just a little course correction to keep your ship pointed in the right direction.
And there you have it. That's the whole process, the 5 steps. First, you assess where you are. Then you set specific goals, you allocate your assets to match those goals, you select the investments, and then you just keep an eye on it, monitoring and rebalancing as you go. It's a simple, continuous cycle that puts you in the driver's seat of your financial future.
So we've covered the entire roadmap, haven't we? From start to finish. We've gone from just figuring out where you stand today all the way to building and maintaining a portfolio for your future. And that brings me back to what I mentioned at the beginning, my final question for you. You have the roadmap now. You have all the steps. The only thing missing is that first little bit of action. So my question is this. What is the very first step, no matter how small, that you will take tomorrow to get started? Just think about it. Whatever it is, I really hope this explainer gave you the confidence you need to take it. Thanks so much for joining me.